Oklo is a company that's developing innovative technology to power these newer data centers that are optimized for artificial intelligence. The company is not yet generating revenue to any significant degree. Its first reactor won't come online, the company says, not until late 2027. Still, a lot of investors are interested in this company, and rightfully so. It's in an innovative industry that's growing spectacularly, and you might want to get in the early stages. But before you do that, let's evaluate the company's financials. Let's take a look at some financial analysis of Oklo. Look at some early indicators of some stock sales, some financial performance indicators, and try and get an early understanding of this innovative company. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. So one of the things that's going on with Oklo is the company is locking up some stock sales. That means many investors that own this stock, some insiders, they're not allowed to sell just yet. But those moments are upcoming. So the first material event, which is a 180-day lockup restriction from some of their investors, was released on November 5th, 2024, providing them the opportunity to sell their shares in the open market. So this could drive down the company's stock price because supply will increase. As you remember from your beginner econ class, I teach that almost every semester at the university, and we go through this every semester where I show the graph of supply and demand, and I show that when supply increases, price usually falls. And that could be the case here. Now, it doesn't always fall, right? If supply increases and demand increases, then you can have a neutral effect, and it'll depend on which magnitude is greater, the supply increase or the demand increase. But a supply increase is usually negative for price, and this should be no different. And so investors should hope for an offsetting increase in demand for the company's shares so that the price won't fall because of the increase in supply. Now, also, just because they are allowed to sell these shares doesn't mean they will. It just means they're allowed to. Many times investors do sell because they want to diversify their holdings. They've probably held these shares for a while now. They probably have too many to their liking based on their overall wealth, and they might want to sell and lock in some gains and put that money somewhere else so that they're not overexposed to one company and one investment. So these shares totaled approximately 13.5 million. The second material event is that the time and price-based lockup restrictions, which apply to the Alt-C sponsor and the Oklo insiders, have also expired as of November 13th, 2024. So approximately 41.3 million shares were subject to the time and price lockup restrictions. So this is another incremental 41 million shares that will be available for sale if these investors choose to sell. Remember, choose. These are insiders, so they have the choice. They can sell or they can hold. Now, you might say, well, why don't they just hold, right? Why would they sell unless they think something really bad is going to happen? And I mentioned one of the reasons earlier already. Let's say you were an insider of this company, and let's say prior to being inside this company, your wealth was negligible. Let's say you had like a couple of $1,000s in wealth, and you started working at this company and you hit it big, and now you're worth multiple hundreds of millions of dollars or tens of millions of dollars in shares of this stock. But in your bank account, you have like $8,000 or something relatively small compared to your ownership shares. So that's a lot of risk in one company, even though that's the company you work at, even though that's the company maybe that you founded, maybe you're the CEO or CFO or some board of director participant, and you want to diversify. You don't want to hold that much of your wealth in this company, especially because it's going to be volatile. It's a startup. It's in an innovative, risky industry. And so you want to sell to diversify, not because you don't like the prospects, not because you don't think the company's stock price is going to increase. Maybe you do and maybe you don't. But that's not the main reason why you're selling these shares. You're selling these shares mainly to de-risk. That's the main reason that I see for insiders selling shares of stock, because they know that the perception is bad. They know that when they sell shares, when insiders sell shares, investors view that negatively. And so they don't do it lightly. They don't say, well, I think this stock is 10% overvalued, so I'm going to sell it. They won't do that. If they think it's 10% or even 20 or 30% overvalued, they still might not sell because they know that's going to send a negative signal to the market. They might still hold on. But when so much of their wealth is tied to one company, and they don't feel comfortable holding that much wealth in one company, especially the company they work at, where they feel that it's impacting their decision making. They're being more risk averse because they have so much of their wealth tied to this company. They will be more likely to sell in those events. Okay, so I think there's a perception here from stock market investors that when an insider sells, it's a really scary sign. And that's not the case. And then on the flip side, it's also true when an insider is buying, it doesn't necessarily mean that they think it's really positive on the stock price. They think the stock price is going to increase. They have many reasons for buying and many reasons for selling. And most often, the primary reason is not the under or overvaluation. More often than not, there are other strategic reasons that outweigh whether or not they think the stock price is overvalued or undervalued. So the company ended the second quarter with approximately 67 million shares in their tradable float. And after all of these lockup expirations and earnout shares bring Oklo's tradable float and total capitalization to a little under 137 million shares. So these new shares that are going to be available are going to roughly double the company's share count. And so if they all go into the market, if they all decide to sell, then that's going to be a huge downward pressure on the company's stock price in the short term. In the short term, right? And then if they decide not to sell, then it won't really have any impact. But if they do decide to sell, those could be the impacts. It's something that investors should be aware of, and don't panic when it does happen or if it does happen. Now, the company's cash used in operations was $25 million year to date. So 9 months, $25 million. But they also have $288 million in cash and marketable securities. So Oklo is well capitalized. They don't need to sell any more shares to raise any more money, because they barely use 25 million and they have over 288 million. At this pace, they can go another 10 years. So eh, also keep in mind that their pace of spending is not really going to increase until maybe 2027 or 2026, to when they really start, when they get those approvals and they can start spending money to stand up their facilities, which they don't expect to happen until late 2027. And at that point, if they've gotten all the approvals to the point where they're already spending money to build these power centers, these nuclear fission centers, then I think investors will be happy by that point in time and they can raise more capital if they need to at a more opportune price. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.